lecture for ABF502, ABF502D, Accounting and Finance Analytics. The topic for this evening is decision making with predictive accounting models. So this evening we will discuss financial modeling for decision making, moving from descriptive to prescriptive analytics. And what is prospective analysis, building a prediction model, and interactive dashboard, and what will happen. Okay, last week we discussed about the what has happened. What happened means that we are looking at the past. Okay, but for today, what we are discussing is about the future. So what is likely to happen in the future is called the predictive model, or we call that as the prospective analysis. Yeah, something to do with the future. So the financial models for decision making. Okay, a company should develop financial models that quantify all its business plan and expected growth. Normally, in finance departments, we call this as budgeting or forecasting. Yeah, budget or forecasting. Okay, without a good financial model, it won't be able to identify the real cash needs. The cash need means how much the cash are needed for the company. So the company will need to do a budgeting process to understand the amount of money needed for the company. So if the financial model looks professional, it will be building credibility with the potential funding sources who will examine it. So normally we refer to the banks, yeah, or the lenders that will provide the finance, yeah, to the company. So in order to convince them to provide the financing, yeah, for the company, we need to have a very good or very strong financial models. Yeah, the financial models that can provide information for the lenders, then for them to actually determine, yeah, whether to give the loans to the company or not. Moving from descriptive to prescriptive analytics. Yeah, the descriptive analytics summarize activity or master data elements based on certain attributes. Okay, so what we meant by attributes are the columns. Yeah, the columns that we described last week. So we're looking at the different types of attributes that describes the data set. Okay, so the descriptive analytics are useful for sorting and summarizing data to create a baseline for more advanced analytics. Predictive analytics attempt to find hidden patterns or variables that are linked to abnormal behavior. So the assignment that I asked you to do is under the predictive model. So you have to find the abnormal behavior, yeah, in the data set. So there are many methods that we can use to identify those hidden patterns. Prescriptive analytics use machine learning and artificial intelligence, and it is very important that the accountant of today keep pace with technological change and recognize the need to move from historical analysis to predictive change and ultimately the prescriptive change. So what the accountants need to do is not just describe the financial data, but we are asked to understand, what will actually happen or likely to happen in the future, and we can plan ourselves better. So, for example, we want to look at the budgets and to identify what are the potential of this company and how are we going to grow in the future. Yeah, how the company going to grow and how the company go to expand the business in the future. So this is talking about the prescriptive change. Yeah, prescriptive change. So the prospective analysis. Prospect means the future. Yeah, well, we're analyzing something to what will likely to happen in future. So the prospective analysis is the final step in the financial statement analysis process. We are looking at the future, so the figures are not real. Okay, those figures provided in the budgets are not real numbers. Yeah, they are based on our previous data, and we make assumptions that something will happen according to what the patterns are in the past. So is to identify the pattern in the database and find actually what is likely to happen in the future. So it can only be undertaken after the historical financial statement have been properly adjusted to accurately reflect the economic performance of the company. So normally the company will need to adjust for we call that abnormal items. Abnormal items, those items that only happen in particular years. Yeah, then we remove those items from the financial statement in order to make a more accurate prediction. You will normally see the financial statements of some listed company. They also provide adjusted number. Yeah, adjusted number. Yeah, I have a lot of example of many company. They will provide two set of financial statement. One is according to the accounting standards, which report all items in the financial statement. Yeah, for the purpose of the income taxes and also for the shareholders. At the same time, they also adjusted the number. They call that adjusted adjusted ROA, adjusted ROI. Yeah, those kind of adjusted number will be appearing on the financial statement. Yeah, that is to explain the results. Yeah, after we put aside the abnormal items. Yeah, abnormal items. Later I can give you some example of the adjusted numbers. Yeah, from the same financial report. Yeah, we have two set of accounts. One is called the report according to the international standard. The other number is according to the adjusted number. Adjusted number. Okay, the accounting policy, earning management, and etc. So when we talk about the accounting policy, accountants actually can adopt certain accounting policies based on the what I call this, the decisions made by the top management. Yeah, they can actually decide what accounting policies to be applied in the presenting their financial reports. Yeah, we have many types of accounting policy, and different policy will provide different results. Yeah, so sometimes a different policy also is very hard for you to compare. Yeah, you cannot compare the results of two companies if they are applying a different accounting policy. So actually, one of the important issues here, the way to analyze the financial statement is to understand the differences between all the policies that we used in preparing the financial statement. And the earning management is one of the practice where the managers can adjust the numbers in order to make the numbers more attractive or better in terms of the performance of the company. So it could involve some adjustment on the policies or adjustments on the accounting's practice. Yeah, so we call them as the earning management. Yeah, the earning management, because many company has they have some issues with the shareholders. Maybe they need to show better in terms of profits or in terms of assets. Yeah, so it could actually create some potentials. Yeah, earning management in the financial statement. And the prospective analysis can also be used to examine the viability of the company's strategic plan, to see that whether our performance is aligned with our company strategic plan. Okay, you can see, for example, some company may use certain strategies, yeah, to attract the customer, and will this actually reflected in their financial statement? Yeah, maybe I want to lower my price of my products. Will this strategy of lowering the price increase the revenues of the company? Yeah, so you want to see whether lower price will trigger or generate more sales, yeah, to the company. Yeah, so all these are, we call them as the strategic plan. There are the strategic plan. Is it viable or not? Is it feasible? Is it workable? Are these kind of changes to the policies will improve the performance? Yeah, so all this we want to see the effect, yeah, of this kind of strategy. Okay, the predictive analytics. Okay, so when it comes to the practice of extracting information from the existing data sets to determine the patterns and predict future outcomes and trends. This is actually the purpose of what we are doing, the study of data analytics. So what we want to see is, can what the past transactions, the existing data, able to provide the patterns and help us to predict the trends, yeah, for the future. Yeah, so this is one of the important methods that we want to learn. Yeah, how do we able to predict, yeah, the future trend? So predictive analytics does not tell you what will happen in the future, but it will say what is likely to happen. Yeah, we cannot tell exactly what will happen, but we can say what is likely to happen. So it forecasts what might happen in the future with an acceptable level of reliability and include what if scenario and risk assessment. What if something happened? Okay, so then what will be our result? So that is the reasons that we want to do the predictive analytics. Yeah, so we can do a predictions of what could happen or what might happen, yeah, in the future. So this will help us to make a better decisions. So some company will use a what if scenario to put into the different scenario, the best scenario, the worst scenarios, yeah, what will happen to their company performance. So if you work in the finance department, this is mostly the accountants will do that. Accountants will prepare the yearly budgets, and also the forecast. Yeah, using that forecast and budgets to predict the future. Yeah, I think now is toward the year end. Many companies are doing this process now. Yeah, they are collecting data from the various departments, and various departments are providing numbers, yeah, to the budgets and also the forecast. Yeah, from there, the accountant will decide what is the more reasonable numbers, yeah, to be in the budget for the 2026. Yeah, so this process is ongoing now. Yeah, I'm seeing many companies are practicing this. So happen that I also provide trainings for some company just to do this kind of budgeting and forecasting, yeah, especially for finance department. Yeah, so they need to use some tools to know what are the likely figures, yeah, for the futures revenues, expenses, yeah, and then what will be the future assets and liabilities. Yeah, I think these are all can be done by using some forecasting tools. Yeah, so this is part of the predictive analytics that we need to do. Yeah, for the predictions. Prescriptive analytics. Prescriptive analytics is to prescribe. Yeah, prescribe means that I provide solutions. Yeah, or prescribe something. Yeah, like you get a medicines for doctor if you got a disease or some. Maybe you are affected by some, virus, yeah, then or bacteria, yeah, you got the medicine. So this is the prescriptive analytics. So how to make it happen? Okay. So a type of business analytics that focus on finding the best course of actions, okay, for a given situations and belongs to a portfolio of analytic capability that include descriptive and predictive analytics. So the prescriptive analytics, okay, uses the information for descriptive diagnostic and predictive analytics to suggest specific decisions or changes in approach to a business strategy. So when we predict something might happen, and then we can do the best course of actions, yeah, to change the effects, yeah, to change the output, yeah, for our future. So we might change our strategy. Example that if we are seeing that the demand of the product is getting lower in future, they say, for example, that you identify a pattern that less customers are buying our products. So this could be a predictions that we have lesser customer, and how are we going to change our strategy, yeah, to overcome the issue of lesser customer. Yeah, then how are we going to, find a strategy to overcome, okay, or just to improve our performance in the coming year. Yeah, so these are called the prescriptive analytics. The prescriptive analytics use multiple prediction models, yeah, to predict the various outcome and the best course of actions for each outcome. Okay, so we will put some scenario, yeah, and then the different scenario will provide us with a different outcome. And of course, we want to choose the best outcome for the company. And this kind of predictions and also the prescriptive analytics, we can actually keep on tracks, yeah, on our company performance in the coming years. Yeah, so these are all very important for all the business person. So just to make sure that everything is aligned with our objective. The prescriptive analytics, yeah, here prescriptive analytics aims to answer what can we do to make it happen. So of course there are many course of actions that with the accountants management can do, and the prescriptive analytics can predict the possible outcome based on the current choice of actions. So what are the outcome based on the current actions, the choice of actions? So if you chose to lower down your price, what might be the results, yeah, in the coming year? So a lot of choices that the company can do, many choices. So we can consider prescriptive analytics as a type of analytics that uses different prediction models for a different input. Yeah, so we can prescribe, yeah, the best actions, yeah, which will produce a different results, yeah, if we input, yeah, different assumptions or different actions, and then we will see different results. And based on all these different results, we select the best options. Yeah, best options is under the prescriptive analytics. So the example of prescriptive data analytics, airline seats prices and the manner in which the cost per seat regularly increases as the departure dates draw near. So most of the airlines are selling tickets very early. Yeah. So now if you want to book an airline's tickets, most likely the cheapest will be now, after 1 month or 2 months before the date of departure. So it will be the cheapest, yeah. The cheaper one is actually, the date is actually far away. But if you are getting closer to the date or departure date, so most likely the prices will be increasing. Yeah, so there are mechanisms, yeah, on setting the price of the tickets. Okay, related component of this decision is the airline decisions to overbook flights and offer incentive to passengers who are inconvenienced. So I think this is quite common some of airlines actually they allow overbooks. Yeah, means instead of 300 seats, they are selling the tickets maybe more than 300, just to make sure that they can, there are some customer may be able to give out their seats, for some incentive. Yeah, so this kind of scenario can improve or say increase the profits of the company, by practicing some, but of course they must be reasonable, in a way that the overbook cannot be too many, because this will actually affect the image of the airline also. So they need to make sure, okay, there are sufficient seats, then some people are willing to get the incentive, and then let go their tickets, just for some few hundred ringgits or dollars, in order to, then somebody can buy the tickets with a higher price. So this is quite common in the airline business. So example of prescriptive data analytics application like Facebook, you know that Facebook, Instagram, and also some social medias, or even like e-commerce platform, suggest the user that there are additional friends they may wish to connect to. Yeah, for some e-commerce, of course, you will have some advertisements related to what you have searched before. I think the search engines can see your patterns and they will push some products to you. So this is quite common, right? I think this is not something new. Yeah, we all know that the data analytics already been used as a marketing, for marketing purpose. Then the advertisers know who are the targets. They will keep on selling the products to the customer. So building a prediction model, okay, this is a very important tools or the things that we must learn. In our lesson now, we have to know what is actually the prediction. So when we do the predictions, we are referring to the future. So we must have data, to support our prediction. Okay, so we could make our predictions for subsequent year based on what we had found in the past, and then test and see how accurate we are with those predictions. So in the prediction model, we will have a training data set. Training. Okay, so we must get enough numbers of data sets that can be used as a training data set. So it's like train the model. So when normally you look at the prediction model or predictions, predictive analytics, you will see example of variables that is predictors. We call them predictors to predict something, the target. So we have targets, something that we want to predict. So we will use a model. I think you can run the model to train the model. So now the first thing we need to do is to train the model. So we could also change our prediction model when we learn new insights and additional data become available. So when we have more data, and we can, of course, we can train the model again to make the predictions better, to output better. So that's also part of the assignments. They ask you to train the model using different prediction model. So you want to improve the model by using by using the data set, but then we check which model can produce the best result. That is something, the purpose of our assignment. With the data available, you can take 80% of the data as training data sets. Okay, so you want to train the data. Okay, then we see what will happen to this the model we can generate. from the data set. So when we can get the trained model, and using the trained models, we want to see how accurate, yeah, the predictions. Yeah, we can use how many predictions are accurate. So we can do this kind of training, yeah, in the models. So the data analytics processed by using an established data analytic model are called the impact cycle. The impact cycle referring to number one, the I. I is stand for identify the question. Yeah, identify the questions. We are providing solutions, so we must know our questions. So what is the questions? What are the questions that we want to answer? And number two, you must know the data, master the data. Yeah, so it's not about testing the data, but it's to know what are the available data. Okay, what are the data that are needed, yeah, for our analysis. Step 3 only, we perform test plan. So we can run the regressions, okay, or we can run the other test, yeah, logistic test on the data sets based on the questions. Based on the questions, we can run the test plan. Okay, so after that, A is to address and refine the results. And C is communicate the insight. Communicate insight is about presentations of the output to the user, and then track the outcome. Yeah, finally we track outcome, and this process can go back again to the questions and then master the data. And this is like a cycle. Yeah, it's like it's a cycle. Then we keep on doing the same process. So many students are asking me coding, this one Python's coding. Okay, when you are talking about the coding, it's just a process of test plan. So test plan means you are using the tools, tools to analyze the data. So that depending on your questions and the data available. Yeah, so we have a lot of tools that we can use. Yeah, for the Pythons, basically why Python is easier to use, because Python actually has a lot of library. Yeah, so then we can use the library to run the model. Yeah, so that's why I recommend you to use Python. But of course, you can use other software if necessary. Yeah, some students say, okay, maybe I don't like to use Python. Can I use other software? The question is about, are you able to solve the problem that you raised in the first part, which is your identify the question. Yeah, it's not about which tool to use. It's about your question. What is your question? Yeah. So don't mistake that test plan is the most important step. In fact, the test plan is based on your question. Yeah. So if your question is about yes or no, I think the best it will be logistic testing. Logic means you want to test yes or no. Yeah. But your test is about the changes in something. Yeah. Then it will be regression. Yeah. It depending on the questions. Yeah. In the first part. Yeah. Which is your identify the question. So a target. The target, here I explain target because sometimes students don't know what is target. Yeah. So in the test plan, target is an expected attribute or value, okay, that we want to evaluate. So for example, if we are trying to predict whether a transaction is fraudulent, so yes or no. Fraudulent means frauds. Yes, you put 1. 0 is mean no. 0 is no. So this kind of classifications model, this is called classification model. classify things as yes or no. Yeah. So it's very good to run a logic test on that. Yeah, logic test, there are many tools that we can run the logic test. Yeah, not just Python. Actually, Python is just one of the many tools that we can run. Yeah, for the logic test. So the target might be a specific fraud score. Okay. If we are trying to predict an interest rate, the target will be the interest rate. Yeah. So depending on what is our targets, what is our targets, and then how do we apply the the tools to run on the data and to find the answers. A class, okay, a class is manually assigned category applied to a record based on an event. Okay, for example, if a credit department has rejected a credit line for a customer, the credit department assign the class rejected, okay, to the customer master record. Likewise, if the internal auditors have confirmed that a fraud has occurred, okay, they will assign the class frauds to that transaction. So we have classes of transaction which are considered frauds or no. Yeah, so these are classifications. So how to select model? So a lot of questions appear here. So what will happen is actually, if classification is either yes or no, so we call them yes or no kind of thing. Yes or no is our output, yes or no. And then if you are looking at the causal modeling, so it's event, event influence other. Okay, then you can see regressions, and you can see clustering, and you can see co-occurrence grouping. You can see profiling. So all these are different models in our test plan. Most likely, if you are testing yes or no, then the best, of course, to do is called classification. Classification. Okay, so then you can run the classifications of something. So some students will run it as like, when I want to predict whether there's a frauds or no frauds, reject or approve, yes or no, then you can use the classification model. Okay, and you notice that we also divided the model into two groups. One is called supervised method. Yeah, supervised method. And the other one is called unsupervised method. Yeah, supervised or unsupervised method. Okay, so what is the difference? Yeah, between supervised and unsupervised method. So you can see the line here. Unsupervised method is actually referring to, do you have a specific target in mind? Okay, do you have a specific target in mind? If the answer is no, then the methods of analytics will be unsupervised machine learning. Unsupervised machine learning. But if the answer, do you have a specific targets in mind, then the answer will be training, will be supervised methods, or we have a training data exist. Yeah, training data exists, and then we can run the classifications. Okay, are you predicting an event or class, or do you have lots of money? Okay, so these are actually have a causal or the regression model. Okay, so all these are different test plan. You will know your test plan until when you have your question. Yeah, when you have a question. So we go through this flow chart, to find the appropriate models, for our prediction. Okay. So now at least you know what is supervised and unsupervised methods, and then unsupervised method including profiling, and including your co-concurrence grouping, including your clustering. Yeah, so clustering is very popular. methods of unsupervised machine learning, the objective is to do exploratory of the data set. So we want to explore further. So, but we don't have a targets. We don't have the targets in our models. We don't have a target in mind. So diagnostic example. Diagnostic means we go back to actually the reasons why it happened. So the profiling identified the typical behavior, okay, of an individual's, groups, or populations by compiling summary statistics about the data, including the mean, standard deviation, etc., and comparing individuals to the population. Okay, clustering help identify groups or cluster of individuals, such as customer, that share the common underlying characteristic. In other words, identify groups of similar data elements and the underlying drivers of those groups. So we have both are actually under, you can see both of these, profiling, clustering, they are under profiling, clustering. Both of these are under unsupervised machine learning. Unsupervised machine learning, because we don't have a target in mind. We don't have a target in mind. So when next time people asking you, what is machine learning? Then you say, are you talking about supervised machine learning or unsupervised machine learning? So the difference is, do you have a target in mind? Okay. So you don't have a target in mind, then it's becoming unsupervised. So there are more diagnostic analytics, example like similarity, co-concurrent groupings. You can read further, because there are a lot of explanation, a lot of textbook actually explaining all these models. All these models have been explained in details about when to use similarities and when to use concurrent groupings. All are in a lot of materials I can apply and then telling you. But here I'm more interested to show example. Example of how to do similarity, how to do concurrence grouping. Okay. So in the later part is actually about the graph. Actually about how this data will be presented in the grouping or clustering or classification. Regression is quite normal. Regression's model is to find the relationship between X and Y. X and Y. This is very common in our thesis. Thesis of the students who do master thesis. They want to prove whether the firm performance is related to the CEO background. Okay, they say, I want to check whether the CEO background will affect the firm performance. So this process is called regressions. So this is supervised machine learning. Supervised. Because we know the target is either firm performance. The firm performance is the target. So regression estimate or predict the numerical value of a dependent variable based on the slope and intersect of line and the value of an independent variable. Okay, independent variable in our case is the background of the CEO. Then classification. Classification predicts a class or category for a new observation based on the manual identifications of classes from previous observation. So we can classify our data into yes or no. So this kind of model, we call them classification model. Okay, so you must observe whether your target is classifications or your target is a value. If your target is a value, then you run regressions. But if your target is 1 or 0, then you run classification. So these are the major difference between the two set of methods. Okay, then we have other predictive analytics model like link prediction. Predict the relationship between two data items, such as members of a social media platform. And prescriptive analytic example, the decision support system. DSS. DSS are rule-based system that gather data and recommend action based on the input. And machine learning now is very popular. So that's why I give you assignment on machine learning. Okay, means you must have enough data to run the machine learning. And artificial intelligence, now AI, for the last 2 years, with the rise of the AI technologies, yeah, so a lot of people are running analytics using AI. Yeah, so you must know how to prompt questions, and from your prompts, then the AI will interpret or classify the results according to the questions that you prompt in the AI's tools. So learning models or intelligent agent that adapt, okay, to a new external data to recommend a course of actions. Okay, so all these are plan. We call them test plan or model. So most likely you don't need to use all the model at the same time. Most likely you just need to use one of the model. Yeah, for your assignment, I think most likely is either regressions or classification. Other than that, I don't think that you need other tools. So just need to focus on specific tools. First, do you have a target? If yes, definitely it is a supervised machine learning. But if you don't have a target, you don't know what is your dependent variables, you don't have a target, and then in that case, you will run clustering, or profiling. Yeah, that will be a different types of models. So I've been doing this many years, so I just want to tell you a difference between the two is basically one with a target, the other one without a target. Okay, then come to a simple question. What is the main difference between descriptive and diagnostic method? So I don't think that this is a difficult question, right? For a quiz or test or even the exam, this is simple enough, for you to answer right. So I don't think that I need to explain more. Okay, maybe I can provide you some hints or answers. You can see from here what is the main difference between the two. So I'm sure you learned this term many times. Since the week 1, I already mentioned the difference between descriptive and diagnostic, right? Okay, so I just give you a simple answer here. Descriptive analytic focus on what happened, past tense, what happened, and diagnostic analytic focus on why it happened. So then descriptive and diagnostic analytics are typically paired because you will want to describe a past data and then compare them to a benchmark to determine why the results are the way they are, similar to the accounting concept of planning and controlling. So this is a simple explanation of the main difference between descriptive and diagnostics analytics. Okay, how does the diagnostic approach to data analytics works, including profiling and clustering? So when we talk about profiling and clustering, so diagnostic analytics, why it happened. So diagnostic analytics provide insight of why things happen or how individual data value relate to the general population. Profiling compare an individual to the populations. Profiling is done primarily using structured data that are stored in a database or spreadsheets that are readily searchable. So in the first week, I mentioned that data sets could have structured data and unstructured data. So the definition of structured data means the data are organized and stored in the database. Yeah, so they are structured data in the spreadsheets, okay, and are readily searchable. Okay, so the profiling is used to discover patterns of behavior. In this example, the higher the z-score, farther away from the mean, the more likely a customer will have a delayed shipment. Okay, so what actually we draw, the graph is actually whether the customer is away from the mean. Okay, the further it go away from the z-score, the highest the z-score, then the customer is most likely to delay in the shipment. Okay, so this is one kind of profiling. Yeah, later I show you the picture of the profiling. Then you know something is further or farther from the mean. It means that there is an outlier or delay shipment. So profiling relies on gathering summary, statistic, and identify outliers. Okay, so identify the objects or activity you want to profile. Okay, what object you want to profile? Okay, so most likely you want to profile something. You want to find outliers. You want to find outliers in your data set. Determine the types of profiling you want to perform. Okay, set boundary. Okay, and thresholds for the activity. Interpret the result and monitor the activity, and all generate a list of exceptions and follow up on exceptions. Exception means something far away from your mean. Okay, so let's see here. Okay, so what you can see here, okay, is an unsupervised machine learning. I already mentioned profiling is grouping under, is part of the unsupervised machine learning because you don't have the targets. Okay, this part, we're talking about day to shift the z-score. This is not the number of days, it's a z-score. 0 plus 1 plus 2 plus 3, a z-score. Okay. Okay, in this case, profiling is an unsupervised method that is used to discover patterns of behavior. Okay, in this case, the higher the z-score, okay, the farther away from the mean, the more likely a vendor will have a delayed shipment. Okay, which is the green circle. This green circle, yeah, is considered farther away from the mean. So we use profiling to explore the attributes of that vendor that we may want to avoid in the future. So if this vendor happened to be here, so most likely this vendor is the one may have delay in the shipment. So profiling is profiling all our suppliers, suppliers. Yeah, based on our supplier. So we do the profiling. So z-score and the box plot show the spread and outliers. So your data sets, you can identify the outliers here. So z-scores provide an example of profiling that help identify outliers. Yeah, anything far away, yeah, from the mean. Mean is at the center, 0. Yeah, so when you see 0.5, 1, 1.5, when you see 3, so data along the line 3 or maybe 2.5, they are outliers. Yeah, so usually in the data sets, you have to know how to treat our outliers. Yeah, those items farther away from our mean. Yeah, that's considered outlier. So then we have block plots, example of profiling that help identify outlier as well. Okay, in this case, categorize with the unusually high average days to ship. Okay, so this could be something that we want to identify the outliers for the shipment, a delay in shipment. Then we do have variance, variant analysis. Yeah, the variant analysis is an example of data profiling. Okay, so then internal auditors analyze travels and entertainment expenses for violations of internal controls. We want to know whether the expenses, whether it's traveling is too high or not. So we had to do the variance analysis. So variance analysis means we have a mean. Okay, then we want to see whether, or maybe we have a target, budget. We have budgets. We want to see the budgets and the actual figures. The difference between the budgeted number from here, okay, from here you can see the black number is budgeted figure. So the black, this point is a black, black. So then the blue color is actually favorable. Blue, why favorable? Because higher than budget. For sales, the figure is higher than budget. So this is favorable. Okay, then orange bar unfavorable. Unfavorable means the amount is more than our budgets. More than our budgets. So is orange unfavorable. Okay, in this case, direct materials is put under orange. It means we spend more money than our budget. Do you understand what does it mean? Is the budget is at this dot, this is our budget. Black is our budget. Okay, then the orange is longer than our budget. Means our material costs are higher than our budget. So this is called unfavorable. Okay, so this kind of analysis, we call them variance analysis. Okay, so we can do this every month. That's just to identify the items that we can investigate or we need to investigate. So then many use profiling to compare variances from the target range. So this example of data profiling. Data profiling by sales, direct materials, labor, various variable overheads, and fixed overheads. So we do profiling. Profiling, and I think in finance, this is quite common. Every month, we need to report the variance analysis to the managers, just to to see why. Why some things happen. For example, maybe you want to see why the sales is higher than the previous month or higher than our budget, and why the materials are more than our budget. So these are called profiling. Okay, then we have Benford. Benford is about the digits. When we have 9 digits, 9 digits in our all numbers, any random numbers, we got 9 digits from 1 to 9. Okay, so under the Benford law, there is a target of number of numbers start from number 1. Okay, for example, if you say 1, 2, 3, 1, 2, 3, this number, the 1 is the first digit. So the chances of the first digit is 30%. 30%. Okay, this is just a statistic. According to the Benford law, 30% of the random numbers that you have numbers from a large sets of numerical number. Let's say in the continuous audit, an auditor may use Benford laws to evaluate the frequency distributions of the first digit from a large number of numerical data. So they say I got a lot of numbers. They say got 1,000 numbers. Okay, so I will expect the digit 1 appear 30%. Okay, and then the digit number 2 appear about 17%. So this kind of rules or this kind of law, we call that Benford law. So if we found that this one is something different. For example, we found that number 3, okay, digit number 3, we expecting that digit number 3 will be around 13. But if you see here, it's less than 13. Then the Benford prediction is 13%. But in our case here, employee transactions, is less than 10. Yeah. So then we should focus on numbers like this. Yeah, to see what could happen. Yeah, or something different from the targets. Yeah, example here 30%, but we have 36%. Yeah, so this Benford. Okay, so the Benford laws apply to large numerical data set, including employee transactions. So if the employee transactions is okay, there's a gap between the target number. This is target numbers, and the actual numbers. Yeah, it's different. Okay, then clustering. Here clustering. Okay, when I see clustering means here we can see 3 cluster. Yeah, you can see 3 cluster. The first cluster is actually orange. The orange cluster, and then you see a green cluster. Okay, and then you see a blue cluster. So there are 3 clusters here. So clustering is used to find the 3 natural grouping of vendor based on purchase activity. So clustering is used to identify groups of similar data elements that the underlying drivers of those groups. Okay, so you can see the distance and also the volume. Okay, so you just put the distance on the X and then volume on the Y. So you can see volume over here, distance over here. Then you can do a clustering of your supplier. Okay, clustering algorithm calculate the minimum distance of all observations and group these elements. Okay, so the distance versus the volume. So you can naturally cluster your suppliers. Yeah, your supplier. And here, if you don't have a specific questions and are simply exploring the data for potential patterns of interest, you would use an unsupervised approach. So clustering is an unsupervised method that is used to find natural grouping within the data. So you run the clustering, then you will see there are 3 natural grouping. There are 3 natural grouping. So in this case, we have 3 natural classes of vendors. There are 3 natural classes if you put distance and over the volume. So what are some examples of clustering? So I think this one, we are looking at the cluster analysis of insurance payments. Okay, then the insurance payment, you have cluster 1, cluster 2, cluster 3 until cluster 8. So internal auditors can use clustering to identify a group of transactions that may indicate risk or frauds in insurance or other payment. Okay, so they may want to find payment amounts by day to pay. Okay, so by doing this, we know that we are in, the insurance payments are in which cluster. Okay, so we can do a clustering by using what? The payment amount versus the day to pay. Okay, so these are just clustering is for explore. Yeah, explore. We don't have any targets in mind. Remember, you don't have a target in mind. You don't know who is wrong, but you just want to see the patterns, yeah, of the data itself. Yeah, so you don't have an answer to ask you don't have a question. Don't have a question in mind. Don't know what is your target, but you just want to know, hey, naturally, what are the cluster of the data? Yeah, so your data set you can put into the diagram. Okay, you can actually put X, Y, and then you can pull the data X and Y versus Y. What happened? Are they naturally in how many clusters? Yeah, they have. And hypothesis testing. Hypothesis testing is used to identify how different groups are. In our case, hypothesis testing, we have a null hypothesis. The null hypothesis means no relationship. Okay, and then there's an alternative hypothesis, means the HA, yeah, which is expected relationship. And test the p-value for statistical significance. Some students ask me, they want to use SPSS. Yeah, SPSS. Okay, this is the reports can be generated by SPSS or even Excel relationship. regressions, you can find the same output. Here, how to interpret the data, the output here is, if you look at the p-value 1 tail. Yeah, 1 tail means one side. Yeah, not 2 tail. 2 tail means left, right. Yeah, 1 tail means one side only. Yeah. So in this case, if you see the value lesser than 0.1, less than 0.1, so the relationship is significant. Significant. So you reject your null hypothesis. Yeah, you reject your null hypothesis. In this case, null is rejected. Yeah. So then you will consider that the relationship is significant. Yeah. So this is how we look at the thesis. Yeah. When we see the p-value, yeah, less than 0.1, in fact, the figure is actually based on the t-value. T-value higher than 1.65. Yeah, so the figure is already 0.07. Yeah, so you can find this figure, 1.66. Here, the T critical one tail value correspond to the p-value of 0.07. Yeah, actually these two numbers are different interpretations of the significance of the hypothesis. Yeah. So when you see the t-value, in fact, t-value is actually representing a p-value of 0.07. Sometimes you have to learn the statistic, because the t-value and the p-values, they are actually, come together. Yeah. When you change the t-value, means that the p-value itself will change. So when you see the t-value is very low, means the p-value will be higher than 0.1. Yeah. For example, if you get a 1 for t-value, definitely your p-value will be higher than 0.1. So this is a statistic, yeah, because there's a formulas there we can compute the p-value from the t statistic. So clustering, yeah. Name 3 cluster of customer who might shop at Walmart. Of course, they will be, who are the customer that who might shop at Walmart. Of course, you can do a profiling, okay, or clustering. In this case, a clustering, right? Clustering. So you do a clustering, then you can know, yeah, who are the customer that might shop at the Walmart. Okay, when do you want to use predictive analytics, including regression and classification? So in our case, here, okay, regressions. We start from regressions. Based on volume, to predict the days to ship. Volume, expected outcome. Regression. Okay, identify the variable that might predict an outcome. Okay, determine the functional form of the relationship. Identify the parameters of the model. Dependent variable equal to the function of independent variable. So in this case, we only have volume. Yeah, based on the volume, we can expect the day the shipments will arrive. Yeah, so this kind of relationship, you see the star here, golden star here. Yeah, the golden star here is actually the point that we want to predict. For example, I want to predict how many days I will receive my product based on the volume. Yeah, based on the volume, I can predict my days to ship. Yeah, it means I receive the product from the supplier. Yeah, from supplier. So what are some examples of regressions? I think regression is quite common. I say that I almost do it every day because this is most of the master and PhD students who do academically. They want to prove a theories. They have to prove a theories. You can use the Y factors over the X factor. Right? So you can find the relationship between X and Y. Yeah, so this kind of models. Okay, in the in the managerial accounting, regressions may predict employee turnover. So what I can do is I look at employee turnover as dependent variables equal to the functions of current professional salary, health of the economy, GDP, salary offered by another accounting firms or by corporate accounting. Yeah, if I have this variable, okay, if I use this variable to predict my employee turnover, then you must collect data. Yeah, data, and you run the regressions. So in auditing, regressions may be used to determine the appropriateness of the allowance account. Yeah, allowance account means losses by default. Default means the customer are not able to make payment. Yeah, for example, you provide products to your customer and they are not able to make payment. We call them as allowance. Yeah, allowance for losses. So allowance for loan losses amount equal to the functions of the current age loan. Age loan means how many days the loan overdue, the loan type, the customer loan history, and the collection success. Yeah. So by putting this variable, I can use a models to predict the allowance for the loan amount, loan losses amount. Yeah. So this is what a regressions model can do. Yeah, regression model. Okay, let's see. Okay, let me check first. Okay. Just I wonder any things that I left out. Okay, good. So regressions, to put it simple, is just to find the relationship between two sets of data, two set of variables. I would say two set of variables. One is the day to ship. The other one is the volume. Of course, you can put the other way. Yeah, you can do a regressions by X to Y. Because if the Y to X, I think that is not the impact already. Yeah, it's become a just pure XY relationship. Regressions and co-relationships are different. So when you say two things are related, doesn't mean that one affecting another. Yeah, they are related, but doesn't mean they are affected to each other. So this is always a question to say that when you have co-relationship, it doesn't mean that X is affecting Y. You only can say that X and Y are correlated. Correlated means they come together. So X higher, Y is higher. But you cannot say X change the Y. Yeah, it's not changing. Yeah, it's just purely relationship. So normally our objective is different, right? So if you want to say X change the Y, so there's an impact of X will increase the Y or reduce the Y. But when you say X and Y are related, then that means in any circumstances, when the Y is higher, the X is also higher. And the X is higher, the Y is also higher. So they are both related, but not necessarily affecting. They are correlated, but they are not the effect and cause and effect. This type of questions, most of the students are struggle to understand. When I say the impact, I'm not saying the correlationship. I'm saying the effect X and Y. So regression is a supervised method used to predict specific value. So in this case, the numbers of days to shift. Okay. So I just found something. Okay. If you say like this, the number of days to shift is dependent on the number of items in order. In other words, Who is dependent? Who is dependent? The number of days is dependent on the number of items in the order. Who is the dependent variable? The number of days to ship is dependent on the number of items in the order. Yeah, okay. So class, I must tell you, dependence on the number of items. Okay, so based on this kind of explanation, this and this, one of them is dependent variable. Dependent variable means the number of days to shift supposed to be dependent variable. So this one supposed to be dependent variable. So supposingly, you have to draw this over here. And this one should be come to here. So later I need to change the diagram, because dependent variables supposed to be on the side where I predict the days to ship based on the numbers of items in the order. So when you see the more volume, the number of days will be higher. This is the logic, right? The number of days will be higher. So later I will change this slide. I think this slide is some error. This one and this one should put on the different side. This one and this one should put on the different side. Yeah, I think there's an error in drawing this diagram. Yeah, this diagram I took it from one of the materials. Yeah, so but I think that by looking at the definition here, day to ship is actually depending on the volume, not the volume depending on the day to ship. They are related. But when you talk about the impact, the day to ship is actually depending on the volume. Yeah, so this is called regression. Regression. Okay, so I need to do a correction, because sometimes the drawing could be wrong. And so when you see the drawing, I think something is not be able to explain. Yeah, so we can use regression to predict the day to ship. So day to ship supposed to be our dependent variable. Yeah, so we want to see day to ship, okay, of the gold star based on the volume on the order. So based on the volume on the order, okay, then I can predict the number of days for the shipment. Okay, the goal of classification is to predict which class an individual belong to. Identify the classes you wish to predict. So the classes I need to predict, what classes I need to predict? Usually 1 and 0. So manually classify an existing set of records, and then select a set of classification model. Divide your data into training and testing set. Generate your model and interpret the result and select the best model. This exactly you can do for your assignment. Okay, so your assignment, you can follow this step. Okay, this is called the classification model. There are many classification models. This is called the decision tree and decision boundary. When you run the analysis, then you know decision tree. This is decision tree. Training data are existing data that have manually evaluated and assigned a class. So I have assigned the class into 1 or 0, and then test data are existing data used to evaluate the model. So normally I say 80% of the data will be training data and another 20% will be under testing data, test data. So we use the 20% test data to test on the training model. So we train the model using 80% of data and another 20% we use it for testing the model. Okay. The decision tree are used to divide data into smaller group. Okay. And then decision boundary mark the split between one class and another. So we can have different, 1, 2, and 3. Okay. So what else do we need to know about classification? So pruning, remove the branches from decision tree to avoid overfitting the model. So there are certain functions that you have to, remove branches. So all this will be applied in the test plan. When you do the test plan, then there are certain considerations. So what else do we need to know about classification? So linear classifier. Linear classifiers are useful for ranking items rather than simply predicting class probability. And they are useful for determining the important values such as valuable customer or which transactions are most likely fraudulent, or not. So this is called linear classifier. So then support vector machines. Support vector machines. Okay, here, sorry, I think I cover up something here. There are here, these diagrams to be here. Actually, I copy it from one of the materials. So this is support machines. Support vector machines. Okay. You can see that support vector machine is a discriminating classifier that is defined by separating hyperplane that work first to find the widest margins or biggest pipe and then work to find the middle line. Okay, so this kind of classifier, you will see it in many of the research paper. Okay, next time when you look at the research paper, you'll find different models. Yeah, when people are looking at the support vector machines. Okay, this is just one of the models, and you can test this model accuracy. Yeah, again, others model. So this is just example of different models of the classifier. Okay, then how do you evaluate the classifier? We have something called overfitting, overfitting or underfitting. Overfitting means you put too many variables, too many predictors that make the predictions overfit. So this is a case of overfitting. You can see here, if you want to do the training model, if you do the overfitting, so that means your classifier is actually very accurate. All the 1 and 0s are divided over the line. So this is a case of overfitting. This is a case of good fitting. This is a case of underfitting. Okay, so you will see in the model design, you need to find a good fitting instead of underfitting or overfitting. Yeah, so this is what they mean by overfitting. How to evaluate the classifier. You understand more if you do the assignment, then you know, what is overfitting, why we don't put too many variables inside. Yeah, too many predictors. Yeah, you put too many predictors, it becomes overfitting. How do we evaluate the classifier? Okay, the training data sets will generate a model. Yeah, will generate a model. And then the testing data set is to verify how accurate the model. Yeah, so there are ways to evaluate whether the model itself is higher accuracy or not. Yeah, so we can do the comparisons. Okay, so look for the sweet spot where we maximize the accuracy of the testing data. Okay, so you will find the complexity of the model and the accuracy of the classifying. Okay, how complex the model versus the accuracy. Yeah, accuracy. Okay, of course you want to achieve the high accuracy, but the model should not be too complicated. Too complicated. So accuracy versus the complexity of the model. Okay, then we come to classifying. The classifier. When we are performing analysis that use historical data to predict a future outcome, we use a supervised approach. Okay. So the classification is supervised method that can be used to predict the class of the new observation. And using a classification model, you can predict whether a new vendor belongs to one class or another based on the behavior of the or the others. In this case, the blue circle represent on-time vendors. Okay, so how to interpret the result? Okay, when you see this result, okay, okay, how do I interpret? Okay, our focus here is this one. So based on the classification model, the golden star is a new vendors. Do you think the new vendors is on time or delay? On time or delay? Okay, what is delay? Blue circle is on time. This cluster, this one, are all on time. These clusters, this cluster, are all delayed. So do you think the gold star is delayed or on time? Just look at the cluster. So this basically is the classifications model. The classification model. Okay, classification. We classify them into two. Blue represent on time. This one on time. Green square delayed. So golden star is a new vendors. Okay, you can interpret. You can interpret because we only have one answer. Yes or no. Yes or no. Is which cluster? Yes or no. Okay, so you can see you run the regressions, you know. Yeah, this will be classified under which category? Yes or no. Okay, you run the regression, you know. Sorry, not regression, the classifications model. 1, 0, and you put a gold star, you put the attribute inside, the system will generate the output 1 or 0. Yeah, in here. Okay, how do we, if we are trying to predict the extent of employee turnover, do we believe the health of economy as measured UGDP will be positively or negatively associated with employee turnover? These questions, okay. If you look at this one, what do you think? What do you think? Employee will leave the company most likely when the GDP is good or bad. Will leave the company when the GDP is good or bad? I'm not too sure. What do you think? As measured using GDP, were they positive or negative associated with employee turnover? You never test before, right? You never test the GDP against the employee turnover. So how do you know this? I think we need to do a regression on that. So to know the employee turnover, the health of the economy as measured using GDP, were it positive or negative associated with the employee turnover? If this question is being asked, I think I will do a regressions test on that. Okay, what I do is I'm going to test, I find the GDP data and the employee turnover data, okay, as the dependent variables, and I will test the relationship whether higher GDP equal to lower employee turnover or higher employee turnover. I cannot provide the answers without statistically test the model. Yeah, of course you may say yes or no. Yeah, but you need to prove to me that the GDP actually increased or reduced the employee turnover. Yeah, it's in examination. I don't expect you to just write yes or no, because I don't want you to simply think, guess. Yeah, or because of the GDP higher, the employee turnover is higher. Yeah, unless you have a strong theory, yeah, to say so. Now, what is the theory behind the GDP? Why the higher GDP will have higher employee turnover? Yeah, what is the theoretical backgrounds, yeah, behind this kind of impact? Yeah, what kind of impact? GDP, again, the economy. Later, I upload one article and explain the GDP versus employee turnover. Yeah, and then you interpret the article itself. Don't listen to me, because I want you to read the article yourself and understand the relationship between the GDP and the employee turnover and see how the author explained the relationship. Yeah, not just listen to me to say, oh, yes, oh, they are related. How is related? It's not my research. Somebody did the research and they found the relationship between the GDP and the employee turnover. How to use the machine learning and also the AI to do the prediction models, prescriptive models. Okay, so what do we do? What do we do next? Okay, so once other diagnostic and predictive analytics analysis have been performed, then a decision process can be aided by the rule-based decision support system. Okay, machine learning models or aided to and assisting artificial intelligence models to improve the future prediction. Okay, here I give an example of the decision support system. Okay, use rules to guide the accountant. Okay, so you can see this is like a flow chart, so we can see the step by steps for us to make a decisions whether we should treat the list, the agreement. The list is basically an agreement. We can treat the agreement as a financing list or the operating list by looking at certain rules. Yeah, so these are the rules that set up by the accountant in the accounting standard. Then yes or no, there are questions on yes or no. So when the question is actually toward yes, so most likely then you become financing list. If the answer is all the way or yes, then you straight away go to the financial list. But if you cannot get any yes, then eventually you become operating list. Yeah, so it's a classifications of either lists become financing list or the operating list. So the rules are divided from the past behavior to help guide the accountants through a process. So for example, the classification of lists is based on evaluating several rules. So here we have rules of like transferring of ownerships. So if the answer is yes, definitely the list become financing list. Then the second option is either it's an option to purchase or no. If the answer is yes, then it will go to financing list. For this one, list term major parts of the remaining economic life. Is answer yes, then you go to financing list. So these are called the rule-based decision making. So we have to follow the rules in order to decide whether this is a financing list or is an operating list. So this kind of system is called DSS, Decision Support System. Yeah, the DSS system. Machine learning. Yeah, machine learning learns from the past data to predict the better outcome. Okay, what these all have in common is the use of algorithms and the statistical models to generate previously unknown models that relies on patterns and inference. For most applications of artificial intelligence models, most companies will outsource the underlying system to companies like Microsoft, Amazon's, Google's, rather than develop itself. Okay, so I think the cost to develop a new algorithms or the new system is actually higher than hire the consultants or maybe outsource to the outsiders or to the company like Microsoft, the Amazons, to do the analytics, to do the analysis or to create a system. So this company have a large database to create more accurate predictions and recommendations engines. So they can have more database and they can actually produce better models to do prediction. But in my assignments that you just received last week, we want to do prediction models. We want to create our own models. Of course, there are many existing models that we can borrow. We can actually copy other people's models and then run on our data sets. But the purpose of this assignment is to create your own models. Using the models that you created to do the prediction. So that's the purpose of our assignment. It's just to learn the model. Of course, you can outsource. If you think that, oh, I cannot do that, can I get somebody to help me? But I don't think that this is the purpose of study, right? So if everything is outsourcing means you don't have the skill. Don't have the skill. To do the work. Don't have the skill. So my purpose of the assignment is to help you to learn something so that you can actually apply the same principle or same skill in doing the work in the office. They say one day your boss is asking you to create a prediction model. So you can use my example that with the data sets available, you can actually create your own prediction model, and then it will help you to make some conclusions or write some findings for your boss to evaluate your so-called your models, your prediction model. Okay, how might you expect a managerial decision support system when evaluating employee bonuses? What do you think? Okay, how the managers use DSS when evaluating the bonus of anybody have any ideas? How might you expect managers to use DSS when evaluating the employee bonuses? This could be the question, right? Because all these questions no straightforward answer. No straightforward answer. Like just now, the answer about the GDP and employee turnover. So these are all discussions. Discussions. So I cannot provide you the right or wrong answers. It's all arguments. There's no right or wrong answer in this case. But you have to give your ideas, and then if the answers are reasonable, then it's acceptable. Okay, so even for exam, we can accept a reasonable types of answer. There's no right or wrong. Some students expect me to say yes. Oh, this is the correct answer. No, I cannot provide you the correct or wrong answer. Because I only can say, how would you expect manager to use DSS? What is DSS? DSS means you have rules and patterns, behaviors to use when evaluating employee bonuses. How to do that kind of managers to do. Of course, I can provide you simple answer, but doesn't mean that my answer is perfectly correct. So you may have your own answers on these questions. We don't expect a standard model answer. You can actually create your own discussions on that. Okay, so this is about bonus. It's about bonus. Okay. So what do you think? Anybody want to answer? Okay, if not, I just give you a simple answer, right? So I cannot say that it's right or wrong. Most of you will expect me to give the right or wrong answer. I don't want to commit this one because my purpose here is not to give you right or wrong answer. So this is to trigger the discussions. It's not to give you right or wrong answer. Okay. So this is the suggestion. This is a suggested answer. So decision support system follow rules. As I mentioned just now, yeah, we have rules to determine the appropriate amount of a bonus. Okay, for example, let's say your bonus depending on the number of your achievement. Yeah, your KPI. Yeah, your KPI. Somebody mentioned KPI, right? So you have a KPI to achieve. Yeah, they say you have 10 KPI to achieve, and you achieve all the 10 KPI. So the bonus must base on the 100% or maybe the highest levels of bonus. Following a set of rules, the system may evaluate. The system may evaluate the management goals such as the sales target, like KPI, or numbers of new accounts to calculate and recommend the appropriate bonus compensation. Yeah, so this is based on the set KPI or certain targets that a person need to meet. Okay, so this is a simple illustrations of the possible DSS used in bonus calculation. But of course, there are many others answers that you can add on, yeah, to say that the DSS can actually help the managers to determine the amount of bonus. But basically, you can write, yeah, this kind of argument, this kind of argument. Okay, then the next one is about interactive dashboard. Interactive dashboard. So when we say the presentation of KPI, okay, there are ways to show the KPI normally on a static. We call that the static way. Static or interactive way. Static means you only have see a picture of your diagram, which is what we did so far. All our diagrams are static. Yeah, the presentation last week are all static model. That means I only show you the static output. Static means one picture only. Yeah, at the moment you only see one picture. Maybe you see a diagram, bar chart. It's actually a bar chart. Okay, there's not interactive. So an interactive dashboard. An interactive dashboard is I would say that it's a data management tools that tracks, analyzes, monitors, and visually display key business metrics while allowing user to interact with data, enabling them to make well-informed, data-driven, and a healthy business decision. Okay, dashboards are used within the business intelligence environment, creating a link between managers and the company strategy, allowing departments to collaborate more effectively and enabling employees to perform with an increased productivity level. Okay, so the most common dashboard, the interactive dashboard that we use in this class is called the Power BI. Okay, so what we do is to run the Power BI on the set of the data. Okay, on a set of data, and we want to do presentations, yeah, on the results of the company. So, for example, you want to know the number of sales for particular regions. Okay, you can use the Power BI and to put the data in that dashboard. In the dashboard. Okay, here I have a simple illustration. Here the Power BI. Okay, actually. It's not very complex. Maybe you take one or 2 days to learn this Power BI. Just to learn a simple Power BI. Of course, what you need to do is to get a free account. Yeah, get a free account. Just sign in. Yeah, sign in with your USM ID. Most likely you can sign in with the USM ID and then you can get a free account. Okay, this is what I did for the past few years. Yeah, in the past few years. Yeah, so sometime I just want to test. Yeah, test the Power BI. Okay, so I'm using a SQL server. Yeah, SQL server, a data camp server. Yeah, to load the data from the data camps. Yeah, so this is the data. This is a dashboard created based on the data sets. Yeah, in the SQL server. So what I do is actually I create this one just for demo purpose. For example, if they say I want to know the product sold in certain areas, yeah, certain regions, yeah, I just need to select the particular regions, and then the diagram will reflect the sales by region. For example, now I click on East region. So all the East regions figure will be highlighted. Yeah, East regions. Yeah, so this is the East region. You can see that the New York City here. Okay, so as I click on New York City, that is all the sales by the New York City. Okay, so this is based on the map. Yeah, on this dashboard. Yeah, you can see how this thing work. Yeah, how this thing work. Okay, so when you are free, just play or maybe click on the data, and then you will see. So now I'm referring to that dashboard. Of course, this dashboard is actually depending on the design. Yeah, anyone can change the dashboard. Yeah, because of the needs of the presentations. Okay, for example, they say I want to change the diagram. For example, if I think that this is unnecessary. For example, they say, okay, here is all New York City, right? Okay, so they say I want to change only. This one is from the regions. Okay, for the regions, they say I want to go to the West regions. Okay, I want to go to West region. So I will see California over here. So click on California. Because all these are actually referring to the sales. Yeah, sales by the California. So I just highlight this part. Yeah, then you can see the sales. But the dashboard all depending on the needs of the company. Yeah, of course you can change. So how to change this one? Okay, then again, it go to the Power BI desktop. Power BI desktop. So what you need to do is to download a system called Power BI desktop. Okay, let me show you my Power BI desktop. Okay, I do have an online course on that. It's a free course. You can register. Then this one will teach you how to do the Power BIs in the desktop. Okay, the Power BI desktop work like this. So this is a desktop version. So what you do is you can create your presentations. Yeah, over here, your report. I would say that your report. Okay, so this is the Power BI desktop. Okay, you can open. Okay, of course, more recent one. Okay, I don't have a much recent one. Okay, actually, I just changed the laptops. So that's why a lot of things are actually in my previous laptop. So this one is go by projects. What projects you want to start? Example, you can start a new project. Yeah, you can start a new project about Power BI. The first thing that you need to do is import the data. Yeah, import data into your Power BI desktop. So basically, it's basically start from importing data. So after importing data, then you can run. Yeah, you can run and create your dashboard. Okay. So I have a simple notes here. About the how to create an interactive dashboard. You can watch the video if you are free. Okay. List some of the key benefits that interactive dashboard provide compared to the traditional static reporting. Static reporting. Okay, so agility for the decision maker. Okay, interactive dashboard empower users to. These are the benefits. Empower user to answer critical business question on demand with the most up-to-date data. The reason why I say up-to-date because I can change the table, and when I change the table, the desktop will display the new diagram based on the new data sets. Yeah, so I do not need to create a new presentation every time. So this will help the company to do the presentation more effectively. So let's say I'm doing the presentation for my October result. Let's say now October is almost end of the October. So let's say next month I want to do again the same result. I just need to change my table. I just need to change the table. And then the dashboard will reflect the new data in the presentation. So this is up to date, right? So maybe after tonight, let's say I changed my data set. So the dashboard that you see is actually reflecting the new data set. So additionally, data can be looked at from the different perspective. and point to view with just a few clicks. Yeah, of course, just now you saw, you can always go to my data sets and then just the presentation, you just click on the informations and you can find the answers. Last semester, I used that as one of the test question. Yeah, in the semester test, I asked the student to go to the Power BI. I created one Power BI dashboard and asked students to find the data inside the dashboard. Yeah, you can do the same. Maybe tonight I will ask you, okay, how many phones are sold in California? Yeah, then you can click on the California and then find the number of phones sold in California. Yeah. Then if somebody asks you how many phones are sold in New York, and then you click on the New York City and then you find the number of phones sold in New York City. And all these are depending on the data that you capture in your table. Yeah, the tables, there are tables in the because I don't have the table now because I save all the table in another desktop. Okay, so that's why I cannot show you my table. Okay, so after I back up the table, then I will show you these tables are actually all in the Power BI desktop. Power BI desktop. Okay, zooming in and zooming out. Okay, detailing the time interval, filtering the country, or showing type specific parameters, and that you don't need enable you to look at the data in the most holistic way, like never before. Okay, so you are able to be more interactive, with the presentation. So this is the power of the interactive dashboard. Instead of just show the static, I think some companies still show PowerPoint. PowerPoint is the old style. It's a static model where it show everything on the picture and then just cannot be changed. If you want to repeat the same process in the following month, you have problem because you have to reload or redo your presentation. So this is a bit wasting time for me. So I rather create a template where I just need to update my table and then everything will be updated on the spot. On the spot, then I can find my answers in the Power BI dashboard. And you can avoid a lot of redundant reports. Definitely, you only need one tool with the state of the art, interactive features, to quickly adapt the display data instead of creating 10 static PowerPoint. I think some students still used to do the page by page, the presentation of the results. But I think that's old practice. I think if today you got a table, you can actually integrate the tables into one dashboard, and you can design bar charts, line charts, okay, or histograms, or even the pie charts, using the tables behind the dashboard. You can do the presentation. So report use the real-time data with implemented intelligent data alerts that enable user to completely eliminate spreadsheets and the presentation. And the dashboard will alarm the user every time an anomalies occurs. So while neural networks will ensure smart detection and future forecast. Okay, less IT involvement. So by empowering users to perform their own and ad hoc data analysis, a company can save valuable IT resources since the number of requests for database query or customization will significantly decrease. Of course, now many people still depending on IT to do their presentation. Some still ask the IT people to provide the data, and then also, some of the support in the IT. So I think in future, maybe we need less support from IT, and we can do our own presentations, from the, by using this kind of dashboard. Okay, the IT department can then concentrate on the other urgent or variable tasks where business user can get answer to important business question quickly. If you know how to run the dashboard, I'm sure that you save a lot of time. Instead of asking the IT department to provide the support. And another benefit is the speed. Speed. And when using the traditional spreadsheets or PowerPoint presentation, data is inserted once and updated manually. And real-time dashboard enable real-time data, and that is the beauty and power of business intelligence at its core. So basically, the speed of the presentations, instead of just imagine I take 5 minutes just to update my data sets, and you have to take 1 hour to present your PowerPoint. If you have a new table, so that makes some accountants work more effective. Just imagine every month you have to do the same presentations, and you have to present your PowerPoint every month. Now I just need to change my tables, and my dashboard will be using the latest data set. Productivity, the amount of data that is collected and need to be analyzed is continuous growing. So, and numerous static and paper sheet or the millions of rows and columns cannot help us as much as they used to. So because of the too many rows and the rise of the self-service BI tools has enabled users to tinker with the data on their own and use modern technologies that will increase their productivity level. I believe in productivity. I believe in things to be done in the shorter times instead of you have to do the traditional way. That's why when I give any tasks or assignments, I always focus on how to finish the task in the shortest way and the more effective way. So I give you the contents for your assignment, means I want you to follow the contents. I give you the data sets, means I want you to follow the data set. So if I don't do that, some students will start to create their own templates. And then that could, I would say that good thing is more creative. The bad thing is you slow down your process. You slow down your process because everybody create their own template. So that will have a lot more times to do. With a simple assignment, you can follow a standard way. So I don't need you to create your own way to analyze. You can actually learn from each other. You can learn from each other. You can even run a same code on the data set, but you just write your own report. I don't really mind are you analyzing it using a very high or sophisticated tools, but I just want you to tell me the result. How are you going to spot the frauds in the data? Unusual items in the data. That's all. No matter what method you do, I just want the results. How are you going to find the errors or the frauds in the data set? What will happen? Again, from the beginning, I mentioned to you that this class is about prescriptive data model. So prescriptive analytics means that about future. So what will happen? Predictive analytics does not tell you what will happen in the future, but predictive attempt to determine what will happen by analyzing historical data and trend. So this is what the 4 quadrants, as what you know, that we start from what happened to why did it happen, and then monitoring what happening now. So then predictions, what might happen. So what might happen? So basically it's about predictive the analytics, business intelligence. So this is about what area outside prediction is the area where prescriptive analytics, or how can we make this happen occur. So outside what area beyond is the predictions, is the area where predictive analytics, and how can we make this happen. So this is the I think now it's already 8:30, right? So I have half an hour more. So so far, any question? I know this is a very long chapter. So this is about prescriptive analytics. From what we learned last week, descriptive analytics. Now we are in the prescriptive analytics. Okay, so of course, this is a very long, and then there are many concepts that you have to understand. So especially on the how are we going to use the asking the questions, okay, and then how do you create your models to what do you call this predicts. Either you use classifications, regressions, or clustering, or profiling. All these are test plan. These are test plan. Yeah, so we have a different test plan. Yeah, for running and answering our questions. Okay, so that is the end of the today. And in fact, I give you the link of my dashboard. You can have a look at dashboard. But unfortunately, I cannot show you my Power BI now because I've saved my file somewhere. Yeah, so I have to open that dashboard. Then all the data will be inside. Yeah. So this is what I cannot do because I don't have my data all captured in another. But if you are able to open the Power BI, okay, you can see the table behind. Yeah, you can see the table. This one is for the server. This one is a DataCamp SQL server. All these applications, these are applications. Okay, so I have created a few others dashboard. Now this is other dashboard I created before. I think this one is for another purpose. Okay, another purpose. So then I have the AP. This one is for account payables. Yeah, account payables. For analyzing, then I do have 300s AP. Okay, these are all a different dashboard I created before. Yeah, different dashboard. Yeah, you can see these are the different dashboards. But all can be done using the desktop. Yeah, desktop using the Power BI desktop. Yeah, as long as you can open the Power BI desktop, okay, the applications, okay, then you can import the data from your Excel, yeah, Excel or CSV. Yeah, then you can start. Yeah, you can start running. Yeah. So select data source. When you start a data source, you just click Excel workbook. Click on Excel workbook and you will come to here. Okay. So what you want to test? Okay, you just say okay. Let's say now I want to test. I don't have a data set now, so unfortunately, yeah. But if you want to test, you just click on the data set example. Let's say I test on this one and click and then import. So the data will be import into the Power BI. Yeah, into the Power BI. Okay, so they will ask you which worksheet. You know why? Because in Excel, you have multiple worksheet. Yeah, so you click on this worksheet, it will show but this one will empty. Okay, this one got column. Okay, this one you can import, right? This one is the worksheet. Okay, just click on the worksheet and then load. Okay. So the data will be loaded into your Power BI project. Yeah. So this one, okay. Now the data rejected already enter. So it's quite simple. Okay. So you just load the data into the Power BI desktop. Okay. Okay. So of course they will show you some errors. Errors, somewhere error. Okay. Doesn't matter. You just close it. Okay, but anyway, you still can open. So all the figures are here. Yeah, on the right side. Yeah, on the right side. So you can actually create. Yeah, you can create something now. Of course, you can create. For example, you want to create a chart. Okay, so you want to create a chart. So you just click. Okay, and then you select the items. Okay, you can select a few items depending on the design. Now I got no idea what to design, but if you got ideas of what you want to present, so you can just click, select the items, and then present. Yeah, the result you want. Okay, for example, you want to look at the DTI table. Okay, and then you want to cross it again the state. Okay, or maybe you want to just create a table. Create a table like this. Yeah, create a table, a DTI basket, but now a DTI basket no data inside. Yeah, so then maybe you want to create employments. Okay, then you can see the employment here. Okay, maybe you want to change this to a diagram. Okay, or maybe you want to change to pie chart, depending on what kind of diagrams that you think is suitable. So you can have a different kind of presentations. Yeah, the presentation all depending on what you want to show. Yeah, what you want to show in this Power BI. So of course, there are many kind of, you can, but of course you need to understand the purpose of your presentation. Yeah, what you want to present. Yeah, this is just a one worksheet. Yeah, so then you can see the table is behind. Yeah, this is the table. For example, if I want to know the amount requested, okay, I want to check the amount requested, okay, versus the, maybe I want to see the debt to income ratio. So they say I want to test these two. Maybe go back to the chart. Okay, then I can select these two. Okay, they say I want to select the amount requested, okay, versus the, maybe the state. Then I can see like this. Okay, understand, class? It's quite simple. It's just a matter of what you want to show. Yeah, they say I want to show the state of amount requested. Then I can see. Then of course this one is the total, right? So you can create like mean whatever, yeah, you like. Okay, so this is how you show the. But of course you can show multiple. Now I can show multiple chart. Yeah, this one is to show the. So now I can see California is the most people, yeah, borrow. Most people borrow in California. Yeah, most people apply and get rejected. Yeah, by the states, by the state. Okay, then if I want to show it by what? They say I don't want to show by states. I want to show it by the loan title. Okay, then it's again we show the loan titles. Okay, so if I think that okay, I don't want to show by loan title. I want to show the risk score. Okay, this is my risk score. Yeah, now you all see the highest bet rejected one is actually at the fair. It's a fair. Okay. Well, because amount requested, then I think that amount requested is not really correct. So they say I want to send it to count. Yeah, count. Count means number of people got rejected. Yeah. So I don't want to show the total amount. I want to show how many people got rejected. Now you can see excellent, less people get rejected, right? Excellent get people less rejected. So the one get excellent rejected one is only one. Excellent risk basket got rejected is only 2,494. Okay, the one get very bad one rejected is about here very bad rejected is actually count of the amount request is 167. So the highest one is fair. Yeah, fair. I don't know why. For some reason, the fair one, the most people got rejected is the fair category of the risk score bucket. I don't know why. Yeah. So maybe you need to find out why. Yeah. Where the people fair, very bad, poor, blank, a blank one. Yeah. Of course, you can remove the blank numbers. Yeah. You do a data cleaning, blank, the one. So, or maybe good. Then very good, and then less excellent. Okay, so remember last time, how do you classify very bad and fair? Okay, how do you classify poor? How do you classify depending on the risk score? Okay, so then of course if you don't like this one amount risk score bucket, okay, they say this one is to keep. Then you want to see the DTI bucket. I'll click on DTI bucket. Now you see, okay, low means less people, right? Mid and high. Okay, so as predicted lah. So when it's high, then the DTI is high. So the chances that you rejected is very high. Yeah, and more people got rejected. Okay, so this is just a simple ways to present. Yeah, the Power BI. There are many more things you can do. And then you can do upload multiple files. Yeah, multiple tables. Example. Your assignment got a lot of table, right? Assignment got a lot of table. They say, I start a new desktop. You can upload all the 10 Excel CSV file into this Power BI and let the Power BI decide how to link all the tables. The Power BI can decide how to click a table put together. Yeah, you can do that. You can do that. But tonight I cannot share with you because you have to do yourself. Go back, open the Power BI desktop, uploads all the 10 CSV file in the assignment, put into this dashboard, this desktop, and see what is the effect. And you look at the relationship. This one only let me see, let me see. I need to find the relationship. Relationship is here. Yeah, this part only one table, so that's why we don't see what do you call this? We don't see the another tables. If you got multiple table, there will be a relationship between different table. Okay, yeah. Then you see. Okay, for example, this one. Delete from model, because I don't need this table because there's no column here, nothing. So you can delete from models. Okay. Yeah. Okay. So you can create another presentations, just based on this Power BI. Okay, you can open a new one, a blank report. Now actually we are creating a report. Okay. So get data, get data. You can get the data from any source. Any source. For example, in this case, Excel workbooks, test CSV, test CSV. Then you go to the data set I give you for assignment, a conventional class, assignment, data set, right? So you just click, highlight this one, open. So they'll bring the data in here. Okay, this data now load. Then you can load the data into the Power BI. Okay. Simple, right? Then the table is inside the Power BI already. This is the table. But there's no relationship yet. Why? Because this is only one table inside. So you have to get more data. They say, I want to get more data. They say, I got a CSV data. I connect. Okay. I connect, and then I get a customer data inside, open. So this customer data will bring in again inside loads. Okay. Now this data, now there is a one-to-one relationship. You see, these two tables now connected each other. The table on this is connected to another table. Okay. If you want to create another connection, you just get another connections. You just go CSV again. You load the second table, fraudulence, open. Okay. So the table will log inside the Power BI and see, well, are they connected? Yes, this one not connected because there's some foreign key and primary keys not identified. So you cannot create a link between the two tables if there's no primary key and foreign key. So you need to get these two keys appear at the same time. Then only the BI can, okay, let's say I create suspicious, okay, then let the Power BI connect. Okay, now it's connected. You see, this table now connected. This table now connected to the first table. Okay, there is a link here. There's a link over here. So now you can see, now we start to have more and more tables. Okay, when you input all the 10 tables, they are all connected, become one. Become one. Okay. So any questions? I only have 10 more minutes to go. Okay, now I stop here. And any question, anybody want to ask? Okay, don't save lah. So I think this one very simple. Don't need to save. You can do anytime. Okay, no questions. No question. Then next week you won't see me, next week, based on performance and why. Next week is Prof. Hui, so he will come to talk about finance. Upload the recording, sure. Yes, okay. Recording ways, I upload the recording. Okay, sure. Who else asking? The link on the slide doesn't work. Never mind. I'll give you the link. Okay. Okay. Good. Anybody have any question to ask? If not, then oh, okay. Yeah, the journals, the journal I'll upload later. Yeah, because now I don't really get a very so-called direct relationship between the GDP and the I need to filter. Yeah, I make sure that the research paper is purely on GDP because most of the journal now, just now I searched around, most of the journal actually talking about the employee turnover is correlate with the GDP. Okay, I got an answer for that, but I just don't want to too much conclude. Yeah, okay, on this point because I worry that some student will say that, oh, doctor, you say that, oh, they must be related. Not necessary. They're all depending on the data set. So we certainly could let the data speak and address the question directly. In general, when the health of economy is stronger, okay, there are fewer layoff and fewer people out looking for a job. So definitely the relationship is negative. Better GDP, less people lay off. Yeah, that means the staff turnover will be lower. Okay, which means that less turnover. Correct, right? So this totally, I mean, logically, yes. Yeah, but I just want to use the data to prove that this is true or not. Yeah, so I just don't want to say yes or no. That's the reason I don't simply conclude lah. Yeah, because to me, as a researcher, yeah, we cannot simply say like yes or no. Yeah, because all our results need to be empirically tested. Yeah, so you must have a support of data. So we say let the data speak. So I will find the data, the paper with the data of GDP, cross-check again the employee turnover. So we need to find this type of direct research. Yeah, but generally, I mean, people can say anything, right? So say, oh yes, a higher GDP means lower turnover. Generally like that. Okay. So additional analysis could determine whether the turnover is voluntarily or involuntarily. Voluntary means you leave the job because you want to find a new jobs. Involuntarily is you lay off. Lay off means because your boss not doing well. Yeah, the boss terminate you. Yeah. So I need to get a very solid evidence on that.